The objectives of my literally 10 minutes of speaking is going to be to remind everybody what Deloitte does in corporate finance. I want everybody to understand that we are in the corporate finance business and go through a couple of areas that we focus on. It's going to come as no surprise to people in the mining business that is an incredibly challenging time to raise capital. And the conclusion of all of this will be a bright spot called non-traditional sources of equity finance, and that's where Justin's roles and slides are going to be very interesting. We'll round that out with Kerry, Brad, and John talking about some of the more technical aspects of stream and stream financing. So just myself, I'm relatively new to Deloitte, come from an investment banking background, or looking at building a mid-market investment bank inside of the world's largest professional services firm, that being Deloitte. We come at the corporate finance business with the traditional lines of business, be it M&A, be it capital raising, be it on the corporate advisory side, and an area that we're really starting to focus on is the fairness opinion business. And what makes our platform a little bit unique is we are almost entirely focused on the mining industry from a corporate finance perspective. And what differentiates us from many of the firms that you may be talking to and the firms that I used to work with is we have a global business. We raise capital on a global scale. We talk about M&A on a global scale. So again, if any of you or your organizations are interested in understanding what your options are in either raising capital or buying and selling assets, we can help you here in Canada and around the world. And you get a sense of our team here in Canada. We run this business out of Vancouver, but it is a global business with a global mandate, and you can get a sense of the people that we've literally put in places around the world to help people like you understand the finance and M&A business as it relates to mining. One of the areas that we spend a lot of time in working with our clients is essentially becoming an extension of their corporate development team. So if you've got a small group looking at M&A or a small group looking at finance, we will come on and work beside you in understanding all of the options as they relate to defining a strategy for your business, working with you to narrow that strategy down to an actionable plan, going out and executing that plan, and all of this related to raising money or growing your business through M&A, wherever it happens to be around the world. Suggestion of some of the clients that we're working with. These are the global clients that we've worked with on the other side, where they've looked at Canada or the the Canadian mining business, and are looking at understanding the industry, understanding the dynamics, and they hire us to help them identify opportunities. Some of the areas that you might not be aware of, just as if you look at those three pillars of the corporate finance business, on the capital raising side, we do raise money. You can see a couple of the transactions we've been involved in. You can see on the M&A side, we are working actively to sell a gold mine in Quebec and a base metals business in Europe. And then on the advisory side, if you look and can read that small font, we're advising the Koreans on Baja Mining and Baleo, which has been incredibly interesting. And we just wrote a public fairness opinion for Waterloo Resources. So again, we're very, very active in the corporate finance business. Okay, so to get started, the first point we're going to talk on is, we can't really talk about capital raising or M&A if we don't understand what's happening in the market. And I'm sure all of you follow the market very, very closely. But again, the market at the end of the day is going to determine the value of the decisions that you make or the advice that we give. And it's fair to say, when you look at the Toronto Stock Exchange, certainly over the last couple of 3 years, it's all about volatility. And if you read those captions closely enough, that volatility is really driven around three factors: what's happening in Europe, the pace of economic growth in the US, and what news is coming out of Asia and China specifically. I think the market's looking for clarity around all of these factors. But it's fair to say that looking at the volatility we've seen, that it's all about risk and the appropriate way to measure that risk. And if you look at the mining business particularly, we have two charts here. On the left side, this is over the last couple of 3 years, the blue line being the metals and mining index, and the brown line, the darker line, being the broader Toronto Indices. And of course, over the last couple of 3 years, it's been relatively interesting. But if you look over the last year, it's been incredibly challenging to raise money in the mining business. It's been incredibly hard to make money in the mining industry. And if you look at some of the statistics, even over the last 2 or 3 months that we've moved into this year, the U.S. market has significantly outperformed what we're doing in Canada. In fact, if you invested in a basket of U.S. stocks from the beginning of the year to today, you're up almost 11%, where you're just touching 3% in Canada. So it gives you a sense of the exposure Canada has to the mining market and the impacts that certainly it has when the mining business goes sideways. And one of the factors that is interesting is this disconnect between equity valuations and commodity prices. This is a chart that really shows that, what, from an index perspective, what is the percentage that index trades as per the price of gold. And it's basically showing that, commodity prices, although they've retreated, the equity valuations of companies that operate in that space has retreated much more significantly. So this is really interesting because in our view, this is why the market has gone sideways for the last year and a half, is the generalists who got into the sector that drove the valuations are now exiting. And this is why there's a lot of discussion today is have we hit bottom when it comes to equity valuations in the mining industry, and this happens to just be gold.